Hey everyone, welcome back to Invest with Alex, where we break down investing and finance in a way that's easy to understand. If you're new here, make sure to hit that subscribe button so you don't miss any future episodes. Today, we're tackling a big question that many beginners have. Where should you invest? Stocks, bonds, or real estate? Each of these investment options has its own risks, rewards, and strategies. By the end of this episode, you'll know exactly which one fits your financial goals best. So, grab a cup of coffee, get comfortable, and let's dive in. Before we compare them, let's break down what each of these investment types actually is. Stocks. When you buy stocks, you're buying ownership in a company. As the company grows, so does your investment. Stocks tend to offer high returns but also come with higher risk. Bonds are essentially loans you give to governments or corporations. In return, they pay you interest over time. Bonds are lower risk than stocks but also offer lower returns. Real estate, investing in property, whether rental homes or commercial buildings, provides passive income and potential appreciation. It requires more money up front but can be a great way to build wealth. Now, let's compare them side by side. Let's start with stocks, one of the most popular investment options. White heavy checkmark: pros of investing in stocks. High potential returns. Historically, the stock market has returned about 8 to 10% per year. Liquidity: you can buy and sell stocks easily through online brokers. Passive investing: with ETFs and index funds, you can invest in the entire market without picking individual stocks. Low barriers to entry: you can start investing in stocks with as little as $10 or less. Crossmark: cons of investing in stocks. Volatility: prices can swing wildly in the short term. Risk of loss: if a company performs poorly, you can lose money. Emotional investing: many beginners panic when the market drops, leading to bad decisions. Stocks are great for long-term investors who can handle risk and want to build wealth over time. Next up, we have bonds, which are often seen as a safer investment option. White heavy checkmark: pros of investing in bonds. Stable income: bonds pay regular interest, which makes them ideal for retirees. Lower risk: government and high-quality corporate bonds are much less volatile than stocks. Diversification: adding bonds to a stock portfolio reduces overall risk. Crossmark: cons of investing in bonds. Lower returns: bonds typically return 2 to 5% per year, much lower than stocks. Interest rate risk: when interest rates rise, bond prices fall. Inflation risk: if inflation is higher than your bond's interest rate, you're actually losing purchasing power. Bonds are best for conservative investors or those looking to balance out their riskier stock investments. Finally, let's talk about real estate, one of the most powerful ways to build long-term wealth. White heavy checkmark: pros of investing in real estate. Passive income: rental properties generate monthly cash flow. Appreciation: property values tend to increase over time. Tax benefits: real estate investors can deduct mortgage interest, depreciation, and other expenses. Leverage: you can use a mortgage to buy properties with less upfront cash. Crossmark: cons of investing in real estate. High initial cost: buying property requires significant money up front. Illiquidity: unlike stocks and bonds, real estate can't be sold instantly. Management responsibilities: being a landlord can be stressful and time-consuming. Market risks: property values can drop during recessions. Real estate is best for investors looking for long-term passive income and willing to deal with property management. Now that we've broken down each option, let's compare them based on different investment goals. If you want high growth, stocks are the best choice because they offer the highest long-term returns. If you want stability and income, bonds provide reliable, lower-risk returns with steady interest payments. If you want passive income and wealth building, real estate offers rental income and appreciation potential. If you want diversification, a mix of all three can give you the best of growth, stability, and income. Most successful investors don't choose just one, they build a balanced portfolio using a mix of stocks, bonds, and real estate. So, where should you invest? It all depends on your risk tolerance, time horizon, and financial goals. Beginner tips. If you're new, start with index funds, stocks for easy diversification. If you need stability, add bonds to your portfolio. If you're ready for a bigger investment, consider real estate. Remember, the key to investing is starting early and staying consistent. Let me know in the comments, which investment are you most interested in, stocks, bonds, or real estate? If you found this episode helpful, hit that like button, subscribe, and stay tuned for our next episode where we'll dive into how to build a diversified investment portfolio. See you next time.